Warning, a big move could be coming to stocks this week. Are you ready? If not, don't worry because I'm going to walk you through how to get ready for this week, including how to actually trade stocks for the week of May 10th, including a free investor plan. I'm going to show you exactly everything that I own. You can take a moment right now to pause the video if you want to. Here's my active holdings, and here's my daily P&L. I'm up 18% so far this year. If you want to find out how I did that, hey, just pay attention because I'm a simple guy. When I was a kid, I learned this song. It was called Head and Shoulders, Knees and Toes. Well, that's what I see happening here. I also learned another song. It's called Wheels on the Bus Go Round and Round, Round and Round. Well, that's roughly where we are right now. That sweet, sweet relief rally. That's right. It's called relief. So in this video, I'm going to walk you through my plans. Note these yellow things here. Those are for caution. Caution on the daily, caution on the monthly, and caution on higher timeframes. And at the very end, I'm going to walk you through how I am attempting to harness AI to trade smarter, not harder. And I want to spend 5 minutes a day with A+ setups. All right, let's go. So head and shoulders, knees and toes, and the wheels on the bus go round and round. That's right. So these are the key technicals for the week. Take a moment to pause this if you want to. Links in the description. I think it's second from the top. If you don't have more time. In 90 seconds, I already told you what to do this week. Be cautious. We are currently bullish, and we had a failed breakout and we failed to claim the 50 in May. So for me, I am deferring to the dominant trend, which is going to mean 3 candles versus the pattern. So the pattern is what I'm looking at here. And when in doubt, look at the monthly. So this is what could drive the week. Notably, this top one right here. Oh my goodness. The timing on the last time they released this, it was January 20th. Let's remind ourselves of how we win games, because if we want to make a plan, it's really important to understand what we want as the outcome. If we don't plan for success, how are we ever going to get it? So in this example here, on an NBA game with the Bulls versus the Grizzlies, who won? All right, take a second if you need to. Who won this game? Oh, that's right. Everybody knows. It's the team with the most points. All right. So we can cheer for the Bulls, we can cheer for the Bears, or we can cheer for the winning team after the game is over. We can say, look, the Grizzlies won. Do you want to bet on that? You want to bet that the Grizzlies won? Cool, I can see the points. You don't think they've won yet? All right, Mr. Bull, you can take it. You can take my bet. I'm going to take your money. So here, this is a quarterly candle, a 3-month chart. Do you notice what these are called? That's nearly a bearish engulfing. That is a bearish engulfing, and that is a bearish engulfing. So who racked up points on the board for a quarterly chart? The Grizzlies or the Bears. It's called a bearish engulfing chart, FFS. So, this one here is called a failed breakdown in a hammer. Is it closed though? No. This is the closing score for the game, right? The last candle that is closed is the last one that is closed. It's the previous one until proven otherwise. So if in doubt, zoom out. And this is what I like to do. I like to expect the best, prepare for the worst, and be ready for surprise. In addition to, I am not trying to be unsurprised. I'm trying to be less surprised. So we always want the best case scenario to happen. However, if we're actually prepared for what could happen, again, when bearish candles form, we could get more bearish evidence because the bears are winning. I know I want to be bullish. I used to be team mega big up. But when the charts break, and I'll walk you through exactly the timelines that led to that. If in doubt, just keep it simple, right? Keep it stupid simple or simple stupid, whatever it means. Because for me, what I'm really trying to do is to avoid disappointment. If I know what I'm walking into, or I can set expectations, anything better than the worst case scenario should be palatable. It doesn't mean I'm enjoying it. It means it's palatable. So this is where it is okay to stay wrong. Okay to be wrong, not okay to stay wrong. So let's go back in time into a time machine, or this thing that we have called Slack, because it's literally an archive. And we can look back here, same as the YouTube videos, but a lot easier to go through here. So on March 29th, this is what I said. I said, bullish scenario summary. We cannot, if we cannot close above April at 54.04, that's for SPX. I'm assuming that the lows are going to hold into Monday and into the close. If we close below that, it's over. What happened? Man, it was so effing over. That was the crash. It was exactly on that day where I warned you. A couple of hollow ones in a row. Crash. Bounce back up. You got some of your money back, less of your money back, all of your money back. And you're like, cool. I feel so cool. I got my money back. Nice. Well, I kind of warned you about that there. So that was my plan because, like a sniper, when the patterns change, and that was the close of the month, by the way, what happened into March 29th and April 1st, I've laid out a bearish scenario. I said, we're 4 out of 4 bearish, or again, going back to here, who's been scoring points? Well, the Bulls been crushing it. So the Bulls might be the favorite, right? They might be at home, but they got upset because the Bears or the Grizzlies, man, they're hungry. Right? They're not taking any excuses today. They're showing up. So that's what happens. Crash a clock, and now we're bearish until proven otherwise. All right, the Bulls got their money back and they're getting cocky. I call that complacency. Let them get cocky. We're here to win. On March 29th, I said we're at 2 out of 4 or 3 out of 2 out of 4 or 3 out of 4 bear on the monthly. It just depends on where we actually close. We are actively going sideways and we're on the verge of going down. If you look really close here, S&P was at 594. Oh my God, 594? Where are we now? We're below 594. That was a pretty nice warning. And that's where he said, red alert is over. Right there, right at the effing top. Yeah, right there, right at the effing top. Right there, right there, right there. He was like, ho, 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 I made my money back. Cool, you made your money back. How stressed out have you been? Oh, but the wheels on the bus go round and round. Cool. I don't like getting dandruff. I don't want the knees and toes. I don't like head and shoulders. No, thank you. So we were on the verge. Then what happened? Man, it rolled over. Is it really that easy? Yep. Why? Red, yellow, green. Does anyone ask themselves what the lights mean? No, they don't. Everyone knows what they mean. Amber is a traffic change. Traffic change? Yes, change. Yellow, yellow, yellow. Oh, yellow. Caution. That's right, caution. So what's the investor plan? Let me reshare it then. I already ran you through it. Here this means something to me. If you like trading on the daily, cautiously bullish. If you're on the weekly, hey, we're bullish. How am I going to argue with it? The last 3 candles formed the trend. The pattern has much more time. I tried to make this very simple, but I'll do it again here. So if we go here very simply, what I'm looking at is the lows here. So bullish engulfing weekly candle, higher low, close above the high, close above the high. Those are points getting scored on this game. You know, like sometimes when you're running a series, there's games in the series, there's up to 7. Well, sometimes you win this one, but you're losing the series. Oh, really? You're going to use the NBA analogy? Well, I hope it's simple enough for you to get it. Why? You need to choose your dominant time frame. So if you're going to talk about weekly, daily, or monthly, and they all provide conflicting evidence and confirmation, that's what I'm trying to tell you. It's a little bit confusing right now, but it was so effing over. And right now, bearish, but caution. We didn't get the actual confirmation. Didn't get a perfect score. Perfect scores are going to happen if we're going to really go down 10 to 20% more. And we're really going to get that washout. What's a washout? It's a bear market. So we're not going to go down another 20% if we can't go down 2. Oh, that's right. We have to go down more before we go down more. Yes. And on the flip side, we have to go up more before we go up even more. If you're watching all the way until now, thank you very much. I'm going to ask you for one favor, and hopefully I can get this video done in not too long. If you could smash a thumbs up or subscribe to the channel, I would greatly, greatly appreciate that. All right. I was aiming to make this one short, but I'm trying to go out of my way this week because if you're going to watch all the way until the end, I want to give you the goods. This is what's really important here. So, all right, this is the plan. These are the days to be on the lookout for. Want to make sure I haven't missed anything. All right, here we go. Caution. Yes. So when you're looking here, what do you have? You have the right of way. You are not at fault, but you still pay the price. That's what I'm trying to tell you. You're like, cool. I'm cool, man, and I don't have to worry about it this time. Yes, that guy's in the wrong. You're in the right. You still pay the price, though. So what do? You use a stop loss. That's your seatbelt. You won't know you needed it until it's too late, though. Or you can put your foot over the brake, which we'll talk about in a moment. So pay attention to the traffic lights. It's simple. Pick your time frame and be an alert for when it's yellow. Be an alert of your surroundings and be prepared to stop with your seatbelt. And if in doubt, put your foot over the brake. Or if you want to be cool, man, again, an options gunslinger or whatever, be extra sure to use at least a minimum stop loss or put the helmet on, please. And what does Jerome Powell say as Mr. Cool Man himself? I approve of this message. So do you like the wind flowing in your hair? Whatever you got left, this guy's like me. He doesn't have very much left here. He's like, yeah, I like feeling that flowing hair that wind through my hair. Or you like being alive? Happen to like the latter? Are you by yourself? Or do you got the family with you? You're just like, yeah, hop on top here. We'll put one kid here, one on the other side, one will hold onto my back. Yeah, everything's fine. I don't know. Should you adjust accordingly, maybe? Mr. Coolman says to adjust accordingly. That's what Jerome's doing, right? Got to wait for the dater. So here's a simple story. Should I wait, buy, or sell? Ask yourself this right now, because I am going to walk you through me. I am usually number one. This is my investor plan for this week. So I usually regret when I buy and it goes lower more than when I buy something and I do not buy something and it goes higher. Just like I equally regret that I do not sell and it goes lower more than I do sell and it goes higher. So all I do is I follow that simple strategy and I look at candles. So right now, if I look at the 1 month, the 1 week, or the 1 day, they each provide different evidence. The reason I say that is because there's a simple recipe on this chart, on this right here. And it basically means that when we're stuck between the moving averages, again, simple moving averages, I'm a simple guy. I like simple charts. I like simple indicators. This is a simple moving average. It's simple. In case I'm not clear, it's simple. We're either bullish when we're above all. The black line is the 200. The blue line is the 50. It just measures the 50 previous candles, or the 200 provides an average of that. It's simple. So on the monthly, bullish. That's the trend, right? That's the long-term trend. 50 and 200 candle trend is what they call that. 50-day moving average. On the weekly, we're stuck between them. We're much closer to the blue line than we are to the black one. And usually when it starts pulling between them, slam, it bounces between the 50 and 200. It happens very consistently. It doesn't mean it's a guarantee, but like, man, when there's thunder, there's usually rain. If there's a thunderstorm coming, there's also going to be lightning. There's ways you can measure the distance if you've been around it before, never seen it. It might just sound like something completely crazy to you. Anyways, we're 4 points from resistance, which means, yes, we're making progress, but we're failing to make more progress. We're actually right on the week, 0.5% in a head and shoulders. But what I'm trying to point out here is that it's a kangaroo. What do we expect in a kangaroo? Volatility. What's volatility? It basically means going down. Going down in a choppy manner. Down, chop, down, chop, down, chop, down. Oh. And then on the daily chart, same thing. Again, there's no lines drawn on here. This is the simplest chart I can give to you. Price, volume, and a moving average. There's a moving average on the volume too, by the way. That's the 50 moving average. So shitty volume as we go higher, and we're stuck in a kangaroo with a death cross. Oh yeah, let's be stupid Sammies. Or maybe we want to avoid the big declines. Oh, where am I here? All right. Yeah, this was it right here. So, oh my God, beautiful bounce. Best bounce I've ever seen. Never seen a bounce so beautiful. I'm like, why are we making progress lower? We're selling the hype. Then we're going to sell the news. Derp. So TA is not necessary to be successful at trading. Not sure what it means. Well, if you're looking at charts at all, then why? I just gave you the traffic lights. I told you to be cautious, like your parents tell you. That's why you have to do trainer eds, right? You have to go get your learners, and you got to go for a test. You got to prove to someone else you know what you're doing. Oh, same thing with a motorcycle too, by the way. So if you want to avoid skidding out, you need to know what to be mindful of. And then again, do the planning early. Of course, you're going to regret not selling and it goes lower. You regret that more than not buying and it goes higher. Like when stocks crash, everyone's like, oh my God, I wish I sold more. That's what everyone was thinking. But then when it goes back up, they're like, phew, right, would have made a mistake by selling. I don't know. I just try to make plans. I'm not trying to be unsurprised, just less surprised. So TA is not necessary to be a successful trader. You ever see Warren Buffett share a chart? I haven't. There's ever like, oh yeah, the chart says, no, he doesn't. That's his style. Different styles. You can hire a carpenter or a painter, and some like acrylic, right? Some like painting with pencils. Some like painting with whatever. They're all artists, right? They're all artistic. This is art. It's not science. I can draw different lines. They mean different things. It's who is drawing it and who's interpreting it. Do they get value? So TA, or technical analysis, is not necessary to be a successful trader. The plan is needed more than looking at the charts. So being aware of high volatility, notable at inflection points, is when we take the foot off the gas, put our foot over the brake, and tap the brake if needed, and then hover the foot over the brake. Derp. Isn't that what we do, right? Pretend you were in this situation. Is anyone going to argue about what you should do? You're in the black car. Again, you have the right of way. You were not at fault. Yes, you still pay the price though. Oh, if I was prepared by having my seatbelt on, and then this person did something they're not supposed to, again, stupid Sammy, they jumped in front of traffic, but you had your seatbelt on. You tapped your brake as they're like, oh, I notice he's coming to a rolling stop here. Why is he rolling? I'm going to tap on the brake. You can see he's tapping his brakes, right? Prepared to stop. To stop what? Stop loss, to stop losing more. That's literally what this is right here. It's literally a stop loss plan. We're losing momentum. We're below both key averages. Kiss of death on the 200. Watch out below. It's over. We're on the verge, right? The river is starting to flow. Bearish. Oh, that was at 590s? Yep. Hey, someone's coming in here. Watch out. Oh my goodness, 590s. Yes. I gave a warning on the top candle too, by the way. Literally on the all-time high, I put out mega crash as a YouTube video. All right. Anyways, moving forward. Cool man approves of this message. All right, let's keep pushing forward. Trying to have a little bit of humor and fun as well, because trading is very stressful. You got to learn to have a little bit of fun. All right, here we go. So even I am not a perfect trader in this moment versus after the fact. In the moment versus after the fact, it is very easy to be calm, cool, collected. Oh yeah, I would have done everything perfect. I would have never made a mistake. I would have sold exactly at the top, bought exactly at the bottom, make a cool 18 to 20%. No risk management, YOLO, right? Fuck the helmet. I want to look cool. I want to go get those babes. So even I'm not perfect. In the moment versus after, it is easy to be cool after the fact. Not so easy to be cool at the moment. So you got your money back, and you didn't fall off the bike this time or get hit by a car. So why put the seatbelt or helmet on at all? Why exercise caution or risk management at all? Well, because the one time you don't do it, you're going to get real hurt. So trends have to be broken, aka why bear now has to go through. Fundamentally, fundamentals tell us what go on the watch list. So we can look at the news. So that tells us what should happen. Technicals tell us when to buy and sell, though. So does the fundamental backdrop or the macro suggest we're bullish or bearish? And then we have to go through a thought experiment or the scientific method, make an observation. Hey, I think we're going sideways. I think we're going to go down. What's the question? Should we de-risk to make our portfolio happy with that? Yes. Hypothesis. Oh, what if we do go down? What if there's a 1% chance? What would we need to see to know that we're right? Oh, we're seeing evidence that we're right. Oh, compute the analysis. Well, if this happens, what else can happen? All right, come to a conclusion, make a plan. Yes. You're not like, or don't use the instruments correctly, like it's up to you. Right? This is it. I knew it was going to happen all along. Drat, I'll buy again. It's cheaper than last time. This is what I'm mostly hearing right now. The price is going up. Let's watch the market. The trend is holding. I'll buy in the next consolidation. Yeah. Damn, I missed the consolidation. But if I wait any longer, I won't profit. Let's trump in. Let's buy. All right, let's go tell everybody. Good thing I didn't wait. Stupid bear. I'll use this to increase my position. Brilliant. At this price, I'll double. What price? The exact same price you were offered over here where you weren't as excited. Now you're like, oh my God, yeah, I love it. Made a tiny bit of money. Oh yeah, got to buy more. Drat. So the bulls are cheering very loudly. They are very loud. The bears are secretly winning. Why? At the time, it was 100% bearish on the weekly and 50, but we closed out with 75% bearish. So what were we? Man, perfect score for the bears. 100% on the weekly, 75 on the monthly. I just looked up at this. I looked up at the points. I'm like, oh, it looks like the bears won. We're on the verge of crushing them. It's the closing of the month. End of March. We're going to close the candle. So what did I say? Man, just listen to the robot. Here's my plan. Plan into tariff day, liquidation day. S&P and QQQ are on radar, which means that they are due for an alert. What this basically means is that if the alerts fire end, they hold until Friday after liquidation day. Then we open a window of opportunity for 3 months, which basically means that Trump was going to create a buy the news event after. The market was going to like the reaction to his news. We sold off into it. Normally, you get a buy after. So just like into earnings, sell off into earnings, higher chance you can go up. But not on liquidation day, no, because when we do it red, we do it big. So liquidation day goes down. Oh, it could be a W. Could have. It wasn't. So the evidence told you it was a W until it wasn't. We're what? Until you blew the low out. Oh, but death cross, sorry, below both key averages with a rejection and another rejection here. Lower high, lower low. Again, stupid Sammys are going to love that trap. They're like, oh, yeah, free food. Yeah, the price is only your life. It's okay. So when we look back to here, again, not trying to be mean. I'm trying to show you how the plan worked out. I've never deviated from it. Simplest way I can summarize is I'm leaning into the algo. This thing I keep talking about, the robot, just makes me money. So right here, it was like, okay, well, hey, if we're going to go higher here for 3 more months, we can go to all-time highs. We could take that high out and then boom, GOAT, right? The GOAT for the stock market. Trump is the GOAT. I was ready to go on April 1st. I had my plan. Again, he clicked on the video to have a plan. Here was the plan. I keep updating my plan. Hey, that confirmation thing looked pretty neat, right? So by waiting until we close the week out, oh my God, that was a pretty good thing to wait. Yeah, can't go higher for 2 more days. How are we going to rally for 90 days, for 4 years? All right, Mr. Coolman over here is just like, no, what are we going to do? On April 1st, I'm going to do this. We are not early by waiting for 8+ setups, and the algo will guide us. If the S&P can alert, we open a window of opportunity for 90 days where 58% of the S&P or 291 stonks were due for a swing algo, and 181 or 36%. That's literally like what? That's really 500 alerts plus 500 individual alerts. And this is what it does when you buy them. It goes up. It goes stonks, right? Stonks make money. Algo make money. So we're going to wait for A+, which is what I told you. A+ setups in 5 minutes or less. The trade smarter, not harder. Harness AI. What's AI? It's a nice, cool buzzword. We call it algo intelligence, just like Apple intelligence. So this is what I own right now. I showed you earlier. Here's my exact mix. I got some shorts. Half my portfolio was short. SH, PSQ, SARC. This stuff is complicated. If making money was easy, everyone would be trading in underwear from their home every day, making billions of dollars. Making money consistently is not easy, especially in a down tape. So how did I do it? I make a plan. Every weekend I make a plan. That's what these videos are. It's my plan. So here we are, April 2nd. Didn't quite get the criteria I wanted to get the swing algo today, but here is the criteria we would need to invalidate my current bear template. Here's the skinny. Same notes. Wait. And then wait a bit more. Please don't be shy. It's a very volatile week. If in doubt, assume it's the sell the rip. Oh my goodness, right? I bought the dip. Cool. I avoided the dip. For what it's worth, we are due for a bounce. When was this? April 9th. We're due for a bounce. But the only thing that's for sure is that nothing is for sure. We may get to some minimum to stabilize today at 4 o'clock. Most important, make sure you consider what you're going to regret more, which is what I showed you earlier. Define who you need to hire and fire in your portfolio, and then define where you want to trim and rotate if needed. For me, my goal was to trim up into 520 to 560. Likely reduce my portfolio by half. No, I flopped on that too, right? I said I'm not perfect. Well, I'm not perfect either. This is what I did. I sold more. Plan. If I wasn't already mostly sold out, this is the 13th now. I would mostly be selling into the 50 weekly MA, buying back after it has formed a support. Until then, sell the rip, baby. Take my cash now, and I'll buy back tomorrow. Why? It's a tax-deferred account. I don't get charged to sell. I don't pay commission. That's why I have a registered account. That's why registered accounts, multiple registered accounts, and I dollar cost average, and I single stock pick in different accounts. I have a plan. Don't you have a plan? Different accounts for different purposes? Really? Yes, IRA, Roth, whatever. You got IRA. You got, in Canada, it's different. You can have a cash account, a margin account. You can have all these different accounts. You know what the purpose of those accounts are? It's like a checkings account versus a savings account. Oh. So this was my plan. I basically said this. Reduce noise and focus on levels. S&P has to be above 549 on Thursday. This was as of the 13th. This would confirm a monthly fail breakdown. If we can't do this, odds decrease of any momentum to get us over the 50 weekly, which has always been what I wanted to see. Again, to prove that I'm wrong, not feels, oh, let's cheer for the Bulls. The Bulls look good today. Let's go Jordan. Let's go Pippen. No, I just want to win. Right? That's all I want to do. I just want to win. This is normally a premium content, so I think it's worth to share this with everybody right now because I want to build trust with you. I'm not blowing smoke up my own ass. I'm telling you I'm not really perfect either. I have no gripes in sharing those. I make mistakes all the time, right? I fall off the motorcycle. I tell you, don't do that. I was stupid when I did that. Our membership is now shut down too, by the way. So I think the existing members may appreciate some context here too. And for the rest of you, this is the good stuff. Please pay attention. Put a lot of effort into this for you today too. All right, so on April 13th, I said, unless the S&P can close at least 1 week over, ideally 2, over the 50 weekly, I am likely to remain over 80% cash. April 20th, unless SPY can close at least 1, ideally 2, weeks over the 50 weekly, I'm likely going to remain 80% cash. April 24th, VOO and VGT are back to where I bought them on rebalance, which basically means that now I'm getting a little bit of FOMO, because if I would have stayed invested, this is the upside I would have missed out on, or the complacency potential. So back to where I bought them and rebalance. Now they're up 1%. I do not feel as excited to buy now as I did then. You guys did. A lot of YouTube, a lot of retail did. Let's buy stocks. Got to buy stocks. I'm not going to deviate from my plan. I'm going to recalibrate on the weekend. I'm not deviating from my plan. That's why I highlighted there. There's my Roth account at the time. This is, again, a DCA, 5K in each. That 5K was better served in Canadian stonks. Those stinky American stonks were no so good. -4 for the NASDAQ. That's the equivalent. And then -8% for VFE. That's the S&P 500. So for those 3 positions, and now skipping forward, for my 401k and Elgo accounts, they have different plans. But I basically said the same thing on the 27th as I said before. So I said no major updates. Still waiting for a weekly close over 565. Exercising patience because we need to be cautious. Because here's what I said on the 30th as we close out the April candle. Caution, because we got breakdowns and breakouts everywhere. 3 failed breakouts in 2021, 4 failed breakdowns in 2022, 3 in 2024, and 1 so far in 2025. How many yellow lights is that? 7, 10, 11. Like, man, be cautious. Why? Because here's what I said. My takeaway is this. And this is when I showed you I blew up before, right? My SOL sorry, I explained all that in the YouTube video. So I never really learned the lesson until I blew up the second time. I needed to make sure I was able to be wrong, have trial and error. Right? I got 30 years to grow this account. Why am I so eager for this specific account? My tiny little Roth account. Sorry, my 401k has what? Like $6,000 in it. It's tiny. I over contributed, so I had to withdraw. That's a tiny account. My Roth is way bigger. And then I got my IRA. I got my cash account. I got tons of accounts. I'm not here to prove anything to anyone. I have a plan, and I'm making money. I'm thrilled about that. So I have 30 years to grow this specific account for this goal. Again, this business operation to what? Make money. For what? In 30 years. I can DCA the whole way through, but I can't contribute more. I can't add money to dollar cost average. So I have to raise cash. So monthly notes say to be cautious. VOO shows me how much more my portfolio should be up at any moment in time. So now I know if I stayed fully in, I would have bought and exited roughly -2. So S&P was down -5 at the time. I have a benchmark for myself because I said I'm not going to deviate from my plan. I'm going to wait. So here's what I said on, what day is this? April 20th. If we can rally another 1 to 2%, then I'll have given up roughly 1% net gains on SPY. So I can look right here and see what it says. VOO, I think it's +2 anyways. And that's perfectly okay with me. If in doubt, I would just start buying VOO, right? That's S&P 500. Can't beat the market, just join it. Just start buying it. In the interim, at roughly 4.3 on 80% of my current portfolio, that would yield me roughly 3.4%, which means just holding onto bill or treasury bills at the end of the year, it would guarantee me to be green with my current -2.7 on account. So 3.4 total gain if 80% of my portfolio is in there and it's yielding an annualized return of 4.3 would yield me 3.4. With my current loss on the year at -2.7, I would be positive on the year. Again, my goal is to not lose more than it is to make. So what did I do? I exercised caution as the pattern was changing with 11 fails. Oh. And then on May 2nd, I said, I'm feeling some FOMO here. I'm not going to lie. I'm still human. Having the plan laid out above will make me stick to my plan and be patient. The FOMO is manageable because I planned for it. Then what happened here? I'm like, oh, this feels familiar. As I was trading through 2018, this feels familiar. So just like with the sniper, here's what I've done. I am unlikely to do much, but I will either buy if we get above the 50 MA, increase to roughly 15 to 20% fully invested, or buy more on the back test or the March lows, 465 to 480. Otherwise, I'm not doing shit. I'm waiting for that one kick where you just let me set you up and knock you the F out. I am not here to compete. I'm here to take sniper shots only. Only. I'm not wasting any bullets, any time, any ammo, any energy. Look at here now, May 6th. Here's what I sent you as a warning. Again, I'm prepared. Maybe you're not. Maybe you should go through the same thought experiment that I did. What if I'm right? What's the thesis? What's the evidence? What's the takeaway? What do we do? How are we prepared? How can we be less surprised? I basically said, take a moment now to assess the risk in your account. Why? Because I've sent warnings before, but people are not really hearing it, I think. So take an extra moment, review all my notes, everything we already went through. If you haven't already taken steps to make a plan now, you should. Here's what I did on May 8th, which was a few days ago. Trim to firm just before earnings, crushed that trade, plus 19. Trim NVIDIA for plus 5. Trim Google, that one's a loser, right? Pew, that one's a loser. Google, trimmed it for -7, down to 1% each. And I trimmed India for plus 3. I bought Bill with the rest. So I trimmed 1, 2, 3, 4%. And then I rotated that. Here is my DC account updated. I said, I don't feel FOMO. I didn't buy anything. Made my money back. Great. Made $182, $41, and lost 172 on that one. I'm never selling these positions. I'm only ever going to buy more. Recently set this account up with a specific broker because there's no commission. I buy $1, $100, 5,000, doesn't matter. I bought 5 times. When I buy more, I will buy 5,000 more of each one. When? At 465 to 480. No sooner. Different strategies for different accounts. Again, I own VOO in here in VGT. In this account, it's different. I have different accounts for different purposes. So I'm not trying to mansplain or over-explain. What I'm trying to do is to make sure you can see what I'm doing with evidence. These are all screenshots, and you can go back and see them. So that 4% that I trimmed, 1, 2, 3, 4, I don't want to be overly invested or, again, having me work for my stocks. My stocks work for me. Now, I've trimmed them. Hey, Google's on final notice here, right? He's going to get fired. He's not going to get trimmed. You're going to get fired, bud. You're going to lower, you're getting fired. Period. He works for me or he's gone. So now I've bought some. I trimmed 4. I bought back 3. I bought NVO. I bought Under Armour. Sorry, these ones here actually haven't filled yet. They're fractional shares. So I'm buying that one and that one first thing on Monday morning. So trim 4%, buy 3. So net effect, I'm still roughly, what am I? I can show you right now. I don't care. It's a tiny account. Why? Because it's real. This account here is, I'm currently 87% invested in Bill. I will be at 85 after I add my Under Armour and STZ. Here's on my watch list too. I'm showing you all the goods. These are the stocks I like. I chose these ones out of this whole list. I updated these as of Thursday or Friday. Here you go. Here's the goods. This is my buy pocket where I want to buy more of the stock. Green is good, in case it's not clear. Yellow means we're below. So that's a negative visual for me. So I see, oh, we're below where I want to buy more. And I also get a risk reward. So I'm currently able to assess how far we are from resistance relative to support. This example here, I expect that I'm going to make 1.4 units of reward for every 1 unit of risk. That's my risk reward ratio. And then over here, I have my open profit and loss. Because as I just showed you, like sometimes I trim, it's like $1, right? Sorry, my realized profit. Oh, I made $2. And then over here, I lost $2 on Google. I made 21. I made 21 over 3 trims on that one. Made 8.5 on that one. Instead of just hodling and being back to flat now after being up 20, I have realized profit. So this position is small. Again, $46, but nine of it is paid. Like 20% of the trade is funded. Just like here with DG or Dollar General. Position's currently worth a total of $91. My realized profit is $146. It's funded and paid for. It works for me for free until I fire it. Like the other ones I fired, like Tesla. Fired. Pew! Right? Don't show up for work. Dragging down morale. You're fired, bud. I'll take your money and I'll say thanks, but don't come back to work tomorrow. All right, a little bit of fun. Let's go back to the notes. This is because I'm trying to do this. I'm trying to go all the way up my plateau of sustainability, or what? Hold the higher low. I had some notes in here too. Let's make sure I didn't miss anything. If you are still watching, you understand my trading plan now. Rewatch and ask questions if you need to. I'm not a perfect trader. I'm just a simple guy trying to form the higher low and higher highs in my skills or my technical, fundamental news analysis. Again, analysis skills in my accounts. Just trying to form those higher lows and higher highs. So again, I'm never unsurprised. I just try to be less surprised. I still get surprised. I still get emotional. I still get impulsive, but I'd rather survive than look cool. I got a partner and 2 kids with me in the back seat. Again, I can't just throw them on the crotch rocket with me and it's going to be fine. So sometimes I plan. Sometimes I even over plan. And the reason for that is because I'd rather just be safe than sorry. Right? I have strong opinions, but I hold them very loosely. So what that means is that the second I go from a yellow light, I start getting cautious. If I get a yellow or green light and confirmation, I go to bull or bear. If I'm making a daily video, a weekly video, a monthly video, or I show you a mix of different evidence, that's why sometimes there's conflicting stories. Nothing is unclear to me. This is what could drive the chart. This is how we make money. So remember, we make money. All right, here you go. The problem is, sometimes it can take weeks or, God forbid, months for these trends to play out. So what does that mean? Sometimes the chart is breaking before it is broke in with confirmation or closed candles. Again, when in doubt, zoom out. Monthly and quarterly candles. And opinions are like a-holes. Everyone's got one, and most of them stink. So I'll stick to the evidence-based analysis. Or buy the hype, sell the news. Buy the rumor, sell the fact. What's the headline here say? Frustrated Trump slams Putin, Ukraine as peace talks falter. Oh my goodness. One part of the world, pew. Another part of the world, pew. Right? Disagreements on Iran, Gaza straining Trump, Netanyahu relationship. Israel is worried about any deal with Trump. Right? Don't you talk to him. And now the White House claims, right? Trump's like, yeah, get that pump, baby. White House claims, this is from The Guardian, so this is from the UK. Oh, my throat's a little bit scratchy. 1 second. Wasn't expecting to make a 30-minute video. White House claims China trade deal reached after productive Geneva talks. Okay, well, here's what I read in the SCMP. So here's what they said. The vice minister, this is just from like a couple minutes ago before I recorded. The vice minister said the talks were candid and productive, according to Reuters. He pledged that China is ready to work with the U.S. to manage differences, extend list of cooperations, and make the pie bigger, but also warned we are not afraid and fight till the end if they insist on the trade war, right? I'm like, yeah, okay. No real progress, right? Yeah, no real progress. The wheels go wound and wound. Yes, so talks about more talks to come. This sounds familiar. Yep. Does sound very familiar. So I'm not going to beat this horse anymore. The wheels are going to keep going around and around. You're either going to get it or you're not. This happened for 2 years last time, January 2018 to January 2020. I'm pointing to this right here like I did at the very beginning of the video because that was a 20% crash right there. Boop. Yeah, negative 20. Mark your calendars for the next SEP or what? A hawkish cut. Hawkish cut, long way from neutral. I heard Jerome say we're flatlining here. Uh-oh. I didn't hear what I wanted. Nope. I marked the calendar, though. It's right here. Everything's in here. For this month, next month. We're not focusing on this very much anymore, though. Why? Man, I know about all this. I don't need to convince you why it's important to me. It's just important to me. I know it's important to me. It's part of my plan. I put the work in. So if you're still being surprised frequently, it's time to start planning more. Look at this. I made a trade deal with who? The UK? Oh, the UK is like tiny, and there's a surplus. Oh, there's a surplus. Yes. Oh, there's a surplus. And UK is like a lot smaller than the EU, right? Yep. So sell the rip until proven otherwise. Minimum close over the 50 weekly, ideally monthly and quarterly candle closes. Otherwise, invest accordingly because the US is now acting as an emerging market. Invest accordingly or don't, like just totally YOLO, right? I'm cheering for the Bulls. Yeah, my Bulls are my boys. How am I ever going to bet against the Bulls? I don't know, because you want to survive. You want to put a helmet on sometimes. And when you look at the points, you're like, oh, I understand what that means. That's the winning team. Really that simple? Yeah, it's like literally that simple. All right, so I'm going to spend a few minutes going through the stream tomorrow and talking about the news, but going forward, I'm going to plan to reduce noise and maximize ROI, which means maximizing an investment on our time, our effort, our energy, our resources, and our money. So good luck to all this week because whichever way we decide to break that inside bar, That's right. I'm not even really reviewing very much this week. Nope, that's intentional because the plan or the notes or what are going to incorporate everything from here. I'm going to talk about this inside bar break for 1 second here because that's what I'm focused on. I made a joke about the knees and toes. Well, look what I'm pointing to here. Until proven otherwise, or again, closing above the 50 MA, which means no earlier than Friday, doing it again for one more week to get two or a stronger case of evidence. If we close this week above the 50 MA, we are over the good luck to all this week. Whichever way we break the inside bar, I believe we're going to have a inside bar to start the week out because we have indecision. That's what a doji means. Doji means indecision. Where did we open and close? Pretty close to each other. Again, simple. So simple charts. Let's hide everything. O and C. Open and close. If all you do is go here to a line chart, it's going to show you. Oh, looks like we did nothing. Correct. Because that's what a doji implies. It implies nothing. Indecision, right? Open at 5625, close at 5643. I don't have to argue with the chart. It's telling me what happened. We're red. Hollow candle. Higher high, higher low, fail breakout. Anyone can read it how they want to. That's how I read it. Why? Because I'm right. Yes, I'm being cocky, okay? Whichever way the inside bar breaks is likely going to be the short-term direction. Over last week's high, we're over the 50 MA. Game on, Bulls. Rack the points up. Again, keyword here being points. Get those points on the board. Otherwise, watch out below. Bye-bye. Because look at the trade template. Did you hear this from China? I didn't. In-person sit down with Trump. Public posturing. 11th hour ask from Trump. Flattery. Right? Brown nosing. Deal signing ceremony. 10% is the low end. They're like, no. We have to fight for the rest of the world. This is not my words. I'm just highlighting her in yellow what you should be cautious about. The Senate says, I'm happy to report there's been substantial progress. Real. There was no immediate response from China. Chinese President Xi Jinping was returning from Moscow. He's returning from a trip, right? Busy. All right, talk to the hand. 5 hours ago, no deal in sight. Yet as China and U.S. enter day two. Again, this is what they're saying. I want to hear what both sides say, not just nice words. How far are we down that list? I don't think we're very far. We're just a public posturing. Wheels go round and round. He pledged that China is ready to fight until the end if the U.S. insists on a trade war. There was no official statement from either side after the first day of talks. Okay, is there an official statement now? Yeah, we're going to talk about more talks. Oh, cool. We're going to talk about more talks. Yeah. I have the headline here. Maybe I didn't show it. Let's click on it and see what it says now. Here we go. Trade consultation mechanism. What does that mean? Conduct further talks. We're going to talk about more talks. Talks are going to come. We're going to talk about talking more tomorrow. We'll talk today. We'll talk tomorrow. We'll set talks up for more talks. Yeah, but look at the rest of the world. There's lots of meetings happening here. Notably next week. What's happening next week? I forgot about that one. I think there's supposed to be Lula and Lula and Xi are supposed to meet. I don't have time to go through it. There's so much going on. Oh, shots fired. Pew, pew, pew. Right? Compromise will not win. Respect. That's right. You put some respect on that name. Are they coming to Shitty Pot, right? Karashima Town. Right? Like in that South Park episode is so funny. All right. It was also said that, but to uphold the common interest of the international community, including developing and smaller countries, and to defend international fairness and justice. U.S. has to show goodwill and be prepared to remove tariffs, saying the talks have been scheduled after repeated U.S. overtures through multiple channels. That means they're begging. U.S. begged for this meeting. They're right out there, first thing, right? Oh, yeah, but great progress. Meanwhile, they're like, I don't know. No immediate response. He also said this. He might speak with Chinese President Xi Jinping. What's he looking for? Let's go through the list. Hey, can I come see you for a date later? It's not even on the list here. In-person meeting is a prerequisite for a deal. Where's it going to happen? Not in a third country like Switzerland, I think. Who's going to go to home turf? Bulls or Bears? So, hey, honey, can I have a date with you later? That's what I hear. I'd like to go on a date. I might speak with him. He's posturing. He's anchoring. Sounds like a little whiny bitch. Right? Like that girl he can't get rid of. Like, just get out of here. Shoo. She's like, no. I love you more when you say shoo. Oh, Winnie the Pooh, say shoo. Oh, that's funny. Saying the talks have been scheduled after repeated U.S. Overtures. He might speak with him, including by lifting the tariffs. So this is what they said. It urged the U.S. to be prepared to correct its wrongdoings or for it to lift the tariffs first. That's what Trump does. Then maybe they would reciprocate. If Washington wanted to resolve the issue through negotiations. Again, negotiations. So lots of yellow text. Exercise some caution. Really, really long video this week. I'm going ad nauseum to try to give you exactly what I am going to do this week, but I'm also going to be prepared. And if you go back to the very beginning, I showed you how in a few minutes only, watching these videos going forward, you should understand exactly what I'm going to do. My thought process. How I try to think less and make more. Trade smarter, not harder. Harness AI. Spend 5 minutes a day, not 24/7. Same thing in the YouTube videos going forward. So thank you very much for your time. I'll see you on the next one.